Well, thank you everyone for joining us today. And in about 40 minutes, we will have the release of the U.S. unemployment claim. So I hope you can all see my charts and my graphs right here on the whiteboard. First and foremost, we have the U.S. unemployment claims, the forecast according to a Bloomberg survey, which is 335K, while the previous data is 339K. Right here we can see the graph indicating how the unemployment claims have been developing during the past 12 months, so we can see rather volatile, going up and down, up and down. And here we can see the data from October up to the last data. And what we can actually see here is that the U.S. first weekly jobless claims report will be posted, again, with posted in 2014, posted 939K increase in the number of new claims for unemployment benefits. The number of claims was 2,000 lower than the reading posted in the prior week. Right here we can see 341K. And the data in recent weeks was highly turbulent due to the holiday season volatility. This week's reading returns to a more stable state. Nevertheless, nearly 4.5 million people received some form of unemployment benefits in the week ending December 14th, the latest data available indicates. That's 180K more than the previous week. What we can say is that yesterday we did see the ADP report, and the ADP private sector jobs data released yesterday encouraged some economists to boost their expectations for the December job report. Citigroup economists raised their forecast to 165K from 125K, and Deutsche Bank economists on the high end went to 250K from 200K. We can also have a look a little bit also at some of the forecasts and what some of the economists are saying and indicating. Okay, right here, what we have is some of the economists that have been polled by Bloomberg, as well as the firm that they represent, and of course their estimate. Over here we have the summary, and the highest estimate being here 355K, while the lowest is 305K, while 46 economists overall were surveyed. In addition, we can have right here some quotes. For example, Chris Rumke, chief financial economist at Bank of Toyota Mitsubishi, says that claims will be important. If they come in below 325K, that would be pretty good anecdotal level. And Mark Luschini, chief market strategist at Janney Montgomery, says jobless claims is a leading indicator, whereas job report is a lagging one. So I want to see claims continue to move lower. The ADP signaled that what might be an above consensus release coming out of the BLS Friday. Okay, so these were just some of the fundamentals that we wanted to highlight. And right now I'm just going to give the word to my colleagues, Alex, who will have a look at the potential negative impact of the unemployment claims on the US dollars. So Alex, welcome to the whiteboard.
As Gita already mentioned, I'll be speaking about the negative surprise trading strategy, which is based on Australian dollar and greenback, as always, actually. And currently, the pair is stuck at level 4-hour support around 88.73. So, just to describe what was happening with the pair during the last couple of weeks, as you can see, during the whole December, the pair was trading in boundaries of double bottom pattern. And only in the beginning of January the pair penetrated the upper boundary. However, currently the pair has almost reached previous low around 88.42, so this level is considered to be a key level for the short traders in the nearest future. However, as we consider that jobless claims can be worse than expected, so the greenback will depreciate and the pair will go up. In this case, the potential take profit could be placed at the 4-hour resistance as well as the recent high, around 88.87. To be more precise, that's just 14 pips from the market price yet, while the potential stop loss is placed just 7 pips from the market price. And the main reason behind such a suggestion is, first of all, that this level is represented by daily and weekly support. So I guess it would be rather hard to penetrate this level only based on the jobless claims. Yep. However, as you can see, technical indicators are speaking in favor of pairs appreciation, as 72% of traders are holding long positions, expecting the OSI to gain in value against the greenback. Meanwhile, the OSI is bought in 73% of all cases, while the greenback is bought in almost equal percent of all cases across the board. And speaking about the pending orders, as you can see, just 43% of them are placed to buy the pair. So even in case the pair will appreciate, I guess the gains will be limited. And as you can see, other market participants are having also bullish market sentiment, as more than 68% of all under traders are holding long positions. And similar situation we are experiencing on Saxo Bank and daily FX. So when having a look at the aggregate technical indicators, as you can see, they are rather neutral or sending sell signals on the longer time frame. But in the near future, the pair is expected to fluctuate about around current level. And actually, as you can see from the 4-hour chart, during the last 126 bars, the pair was bounded within boundaries of the 180 pips, so it would be extremely difficult to the pair to break either the lower or upper boundary. So the pair is still likely to fluctuate within the expected boundary. So once again, the potential negative surprise trading strategy in case of the worse than expected data is to buy OSI greenback at the market price, which is currently 88.79, and the 200 minutes moving average. And the potential take profit could be placed at 88.87, while the stop loss could be placed at 88.64. So I guess that will be all from my side, and I'm giving the floor to Thomas, who will discuss the positive surprise trading strategy, and we'll have a look at the market reaction. So welcome, Thomas.
Thank you very much, Alexander. Just let me put myself onto the whiteboard and share my graphs. So yeah, I'll be presenting a possible positive surprise trading strategy, and what you're seeing is United States dollar Swiss franc 1-minute chart. Right, maybe then, yeah, to make it a little bit clearer, let's make it like this, so you would be able to actually see what is being shown. And you can see actually that the pair in the past few minutes has breached already the daily low, and therefore have to a little bit readjust the trading strategy on where it is put. Just let me see what can be done very quickly. So yeah, maybe by that time I will try just to put the possible trading strategy and support via the United States dollar Swiss franc, and then we'll see what we go. So yeah, I won't put stop loss for the time being. Let's wait a few minutes and see what's going on with the newly formed daily low. So yeah, first of all, why United States dollar Swiss franc? It's because it's strongly bullish, so 74% of traders are already long on the pair. Also, United States dollar is bought in 56% cases of all cases, although it's not that much. However, at the same time, Swiss franc is being sold in 72% of all cases. And you can see that market sentiment provided by the other market participants is actually rather similar, 67 to 64, and the round of traders are bullish. So we are 4 minutes until the release of the data. Let's see what the technical indicators give us. As you can see, we're seeing a slightly mixed signals in 10-minute chart, which was done 20 minutes ago. Actually, technical indicators point at appreciation of the pair. However, we can see a substantial downside pressure from the medium to, let's say, to medium to long term, relatively long term thinking. Find the circumstances, technical indicators. Okay, so what we're seeing now, it seems that the pair now has reached a new daily low at 0.9073. Let's take a look at the daily chart maybe. What we're gonna see there. Yeah, it has done it a few minutes ago and seems to be picking up at the moment. So I guess, well, in general, market strategy would remain pretty much the same. Buying at market, setting take profit at the daily S1. Let me indicate it right over here, which is located at 0.9087. Guess I will shrink the graph a little bit to make it a little bit clearer to see, and just a little bit too much. So yeah, at 0.9087.3, and then I guess the stop loss could be definitely made at the recently formed daily low at 0.90735. Also, let me indicate on the platform. So taking in mind what we're having at the moment, if you would enter the position at the moment, the current market price actually would be 7 pips below the take profit level and 6 pips above the stop loss. And we can see the pair is a little bit much more bullish before the release of the data, which is in 1.5 minutes, right? So until that time passes, I guess I could put also for information purposes, the market sentiment of other United States dollar crosses, and see maybe we would be able, in case you will be able to make something out of it, right? But as I can see, in quite a few cases, actually we are having rather mixed signals. You can see this whole part right over here, mostly short, whereas majority of the pairs right over here, and the main pairs are actually United States dollar long, and we're having similar mixed feelings in these major crosses right over here as well. So it seems that that a lot of medium to long term position is actually coming from the other currency pairs. Nevertheless, we expect the unemployment claim have substantial effect, especially taking into account how much better it came out and how much further from the predictions came out yesterday's ADP non-farm employment numbers. So yeah, we can see pairs somewhat consolidating around 0.907978, in general 0.9080. And yeah, let's wait for the release of the data and see what's going on. Just a short reminder, take profit at the daily S1 9087. Yeah, so the data came out slightly better than expected, so I guess we should see some bullishness, but I'm not sure if we'll manage to reached daily S1. I guess 0.9085, taking in mind this marginally better than expected data, would be much more reasonable expectation. And you can see that initial market reaction was 4.6 pips, and of course, as usual, we are seeing a pullback as majority of the bulls, of course, are winding up their positions to capitalize on the gains. And what is now unusual, we're seeing already some sort of bearishness into the reaction. So overall, new trading bar opened pretty much with no change in market price in the past 4 minutes. So yeah, all that being said, it seems a little bit unlikely that this data could bolster any significant moves, and therefore daily S1 actually would become, I would say, medium to long-term target, and the initial reaction of 4 pips, which reached 0.9084, could be, well, pretty much the short-term expectations in the upcoming next few minutes. So yeah, that being said, I hope you found this useful. We'll have to look a little bit into the numbers, why the reaction was rather muted. Yeah, that's all from my side, and I give floor back to you, Gita.
Thanks, guys. Thanks for great technical analysis. Now, moving on forward, Dr. Da, perhaps maybe you have any comments, ideas on the latest released data. Feel free to turn on your microphone on and share your thoughts with us.
Microphone on?
Yep.
You hear me? Yes,
yes,
no, maybe?
we do.
Oh, good. Oh, good. The only thing that seemed to jump out was the claims themselves of 50,000 more this week from the prior week. After that, it seems like a non-event. I'm looking at the 30-year. I see the U.S. stock market backing off, but the 30-year is lifting up a little bit. We're seeing, continuing claims was 2.86 versus 2.815. That was pretty much the only real number out of it. There wasn't much of an effect from there. 30-year is trading at, 10-year is trading at 2.98, and it didn't close on the 3 last night, ran up above it. I think if anything, as a trader, I like to watch the way the bonds act. I think that's usually a great warning sign if something else is going on. So at this point, the bonds are not really reacting in a poor way, and stock market is a little off, gold's a little off from where it was. It was up about $4 from the news. I don't know how much Draghi is going to have an effect. I would think that Mr. Draghi might have more of an effect than the numbers today. And I guess that's about the only real signs that are jumping out. It doesn't seem like there's anything really that important out of these numbers, and I think everybody's still standing to the side, even with the 4-week moving average dropping 9,750 to 349. The only real number really that jumped out, like I said, was the 50,000 change, the continuing claims. After that, not much. So, good job, guys. And I guess if anything, we'll just watch the different effects that we always watch. Always looking for those telegraphs, as you like. Dukascopy did the poker contest, and you look for different tells by different players. In this case, the different players are bonds and different currencies, and the width of the bonds between the 10-year and the 30-year and the stock markets. And right now, the tells seem to be telling us that it wasn't that much of an effect at the moment. So I guess Mr. Draghi will have more power to move and give us some real action today if there's going to be anything. And I think everybody's going to sit on their hands, as we would say around here, where they do nothing until tomorrow with the big number coming out. I hope that gives some insight.
Great. Yes, absolutely. Well, thank you very much for your comments. And now just feel free to continue on forward with your webinar. Thanks, everyone, for watching us and having a